if you've ever drank enough coffee, so much so that you could feel sounds. Go ahead and hit that like and subscribe button. Folks, thanks for joining us today for a very special Saturday webinar. I am your host, Ryan Faluna, and I am here with the one and only Miss Izzy, pro trader and educator. Izzy, happy Saturday. How you doing? Thanks for joining us today.
Happy Saturday. Thank you everyone for joining. This is kind of, I've lit like a little bit out of my comfort zone, so I'm glad to be hosting this with Ryan. He's been a great help in, helping calm down like the anxiety.
You're doing great. Everyone is here to see you, so thanks very much for joining us today. And remember, we're just talking about trading today. I think everyone that's here is probably really interested in the markets in general and how to actually trade the markets. So this should be a lot of fun. This is actually one of the highlights of my week is talking to other people about trading. We happen to be doing today's on Saturday. One of the things that we're going to cover today is how you can be successful trading while having a full-time job. I have a full-time job. Obviously, I'm fortunate that I can watch the market. Izzy, I know you have a full-time job we're going to talk about real soon, but I just want to kind of start off by saying, you know what? It absolutely is possible. Even when I was starting, I was not able to just trade to make a living. I had to trade while I also worked another job. So I know sometimes it feels daunting and it feels hard, but it can absolutely be done. And we're going to talk a little bit about that today. Now, before we get into that, Izzy, I want to kind of introduce you, a little bit of background about you for the people that don't know. So I guess I would say the natural question is, how did you get started in trading? What made you get started in trading? And how long ago was that?
So I started trading just over 10 years ago now. So I just turned 30. So I started just around the time when I was like 19, 20. Back then I was working in tech sales. So selling things like, Apple products. And obviously I had like a really big interest in Apple back, like a decade ago. And I kind of started looking at investment opportunities and what needed to be done. So that was like my first initial step into the market.
Would you call yourself, like, when you first started, were you more of like kind of investing in things that you liked, or were you actively trying to like get in and out and actually trade?
When I first started, I was just trying to like invest in certain things that I like. So like Apple, BlackBerry, Nokia, whichever other it was mostly tech products that I was looking at. And then I had posted like one of my very first wins. So I was pretty proud of myself. And I remember like back then I just kind of posted like a little snippet on my BlackBerry Messenger as my icon picture of my profit. And I had one of my good friends reach out, and I had no idea that they were actually all trading. So my friends like Johnny, Jimmy, Ray, they all had like their own little stock group, and they're a little bit older than I am. Like they've got like probably 5-10 years on me. So they were in the game a bit longer than I was. And so they had reached out, asked me, how long have I been trading? What have I traded? And I kind of just gave them like a quick rundown. And we actually had like my friend Johnny host a chart night at his house. And that was my first introduction into charts. So I was looking at charts when I first traded like Apple and BlackBerry, but it was very basic, just on my phone. But that was like my first transition into like actually looking at indicators, moving averages, RSI and all that sort of fun stuff. And it kind of just went from there.
So that's really crazy, because you pretty much just summarized almost exactly how I started. When I was younger, I saw the movie Wall Street, and I was like, oh, this is so cool. Gordon Gekko, like the whole thing, this is so cool. And I did the same thing. I wanted to get involved in things that I knew and understood, technology. A long time ago, I told my parents they should buy Google back when it was like $20-some or whatever it was. Yeah. And of course that never happened, and so on and so forth. But so from a young age, I definitely wanted to be involved in the market. And when I first started, it was buying things that I thought were going to be worth more down the road. Investments, not necessarily trading. Like you, I had never really looked or understood a chart. I didn't know technical analysis. I didn't know indicators. I didn't know all of that stuff. And then as I started to get my feet wet, from learning how to buy stocks and learning how to actually trade them, I started to research more and more, and it was all self-taught. And I'm thankful that I had a business background in college. I had a management and finance major, so it wasn't really a big deal. But at the same time, I still had to teach myself everything. So chart night. So tell me about that, because I also had a friend that was involved in the market that was older than me, and he passed on some life lessons to me. But we never had a chart night. So tell me about chart night. What did you guys do?
So my friend was the one that kind of hosted it. He was a little bit more familiar with charts, and we would just kind of look at a few names. He would do like a quick rundown of some of the different indicators he was using, and I know how you feel. Like, I guess I remember that exact day. I actually still have the picture of my very first chart that I looked at from like 12 years ago. If you guys are interested in seeing it, I'll post that later. But
What stock was it?
I think it was ITRM. I'm pretty sure that was,
Nice.
yeah, I'm pretty sure that was it. But I had it up on my screen and I was just looking at this thing, and some of the guys in the room were like, I was the only girl. Okay. So again, I've kind of like another thing, like being the only female, you kind of like, it's hard to transition into that because none of my friends were interested in doing anything like that with me. So I couldn't convince anyone to come to these things with me. But I remember looking at it and I was pretty confused. Like I didn't want to look stupid in front of the crowd. So I was
Sure,
just like,
sure.
oh yeah, like I think I'm catching on, but I really had no idea what I was even looking at. Yeah.
And so like, were you guys like discussing indicators? Were you looking at,
Yeah.
at formations? Like, tell me a little bit about like what you were actually, and then also, did you understand everything that people were saying?
No. So I definitely didn't understand everything that people were saying because there were so many different indicators, and so many things that different people were looking at, because certain people in the room had like it was a variety of experience, I guess, with
Hmm,
trading
hmm.
and charting. So everyone kind of had their own input, but for someone being like completely new to technical analysis, it can be pretty overwhelming. And I think that kind of is part of the reason why I get this a lot. I'm very simple when it comes to charts and indicators. I kind of just narrowed it down to the ones that I felt I needed to use and kind of cut out all the clutter, because I did find it overwhelming when I first started off having so many on the chart. And that was one of the things that I took away from one of those chart nights that I had.
Yeah, and actually, I've had that same lesson too. I mean, you can put 800 indicators on a chart; it's not necessarily going to help you. And I
Yeah,
tell people all the time. I get asked all the time, "What's the right indicator to use?" And there really is no right answer for that, right? It's whatever fits into your style and your trading plan. And I too really like trading technology stocks. One of the rules that I've learned from people that are smarter than me is trade what you know. Trade what you know. It's going to be so much easier if you understand the business and you understand what news means for these particular stocks. So I'm glad that that you have the same approach. Now, did you have anything like any type of formal school background into this? What was your major? What was it involved with finance and stocks and any of that?
no, no. So my major was actually in journalism. So it's kind of funny when I look back now, because I always did want to maybe get into some sort of broadcasting, but I never really had any interest in just like mainstream news. Um, but I did have like a really big interest in finance and trading. But I find that I think you can kind of take away certain bits and pieces from any sort of background that you have. So I think part of the reason why, and I hear this a ton on my Twitter, is I know how to break it down really well. But I think it's because from all the writing I used to do, and you can only list facts when you're writing a newsletter. So I think I'm just like very familiar. Like that's part of the reason why I think TA is like a really strong point that I have, because um, I'm only looking at historical price facts, and it's all displayed on the chart. So you can't really you can't really put any sort of like false information in there, because the prices are there, they're present. So
For sure. For sure. Now, so how did you actually do the transition from journalism into trading and finance? Was it kind of like an overnight thing? Was it a decision? Like, how did that work?
it wasn't overnight, but I actually I only went the finance route in terms of my actual profession. So um, I kind of knew that when I had graduated college, that that's what I wanted to do, because at that point I already had been trading for 2 to 3 years, and I really wanted to get more involved into finance. So I I looked at what my options were, and initially I had started off at TD. So I worked
Nice.
as an advisor there, and I got some of my certs, so I was, able to like sell like mutual funds and those sorts of things. And I really want to get over to the investment side, which at the time was pretty tough because that was recession here in Calgary. That was around 2015 or so, when oil completely crashed, and that's like our main driver for our economy out here. So I kind of got held back there, and it actually ended up becoming an opportunity for me to trade full time. So that's when I had my first year full time trading, and that's when I really started to get more familiar with technical analysis, because I was constantly watching and getting familiar with the same stocks and how they move day over day.
And now, when you were working for TD, did that help you at all? Did that teach you any new tricks? Were you able to network with other people that were, either more experienced or kind of like mentorish in some cases?
Directly from the bank, no. From the investment side, a little bit, but it was that's when I realized that I was maybe more of a trader versus a long-term investor, because some of the things that they were looking at, they were just buying and holding for so long. And as I had started getting more familiar with charting, I realized that I don't need to buy something and hold it for that long of a period of time. I could buy it, sell it, buy it back, sell it again. But like it was a pretty good network of people from the investment side, but no opportunities in the market at that point.
And so after TD, what did you end up doing?
So after I had gone to trading full time, I actually did work at a little boutique, and it was a pretty small fund, like under 10 million. But that's when I really started getting more familiar with the way things move in the overall market. So that's when I had started looking more into kind of like moving away from just tech and Canadian stocks, because I was mostly only trading things on the TSX at that point. And I had like a room in there filled with, there's probably like 10, 12 screens at once that had all the different charts on there. And I was kind of monitoring them for him. I would kind of just like oversee his portfolio. And I had a little bit of trading access in there. Like if he felt comfortable enough for me to to take on a trade, then I had, he'd give me like a certain amount of buying power. But it's funny when I look back now, because my pick for him was actually Shopify. And that was one pick that I actually like dug really, really deep into, because that was around the time that they had IPO'd. And being, a Canadian company, I felt really strong about it. And I'm kind of biased, but I do always feel stronger about Canadian companies for some reason. I find that there's a lot less room for, I guess, like any sort of, fraudulent activities or anything like that with the company itself. But
yeah, I think that makes a lot of sense. And I think that, playing into the whole trade what you know thing. I mean, if you're around these companies and they're started in the country that you live in, I think that makes complete and total sense. So that's awesome. Now, when you were in that, were you like being taught new chart formations and patterns and how to read it? Were you kind of forced to do that on your own? How did that whole dynamic work?
So it's funny because he was showing me certain things, but I already had known a whole lot, because I was already doing my TA. And I felt maybe at the time that because I was a 24-year-old kid, that he didn't really trust my analysis. So I kind of wanted to prove myself to him that I knew what I was talking about. And I actually had started to teach him a little bit on options, because I had just started learning options then. So I was kind of passing on any knowledge to him in terms of options, and then he was passing on any sort of knowledge he had for me in terms of technicals that he's picked up on.
Awesome. So real quickly on that, we got a question here. Are there any Canadian stocks that you recommend to others?
I kind of trade the same Canadian stocks over and over again. So I would probably be super biased. I like CPG. And I like I've started, like, as I've grown on Twitter, I try to focus more on the ones that trade on both exchanges, so that the audience can benefit from both sides. Because the ones that trade just on TSX, it's hard. Like I would get questioned a lot, like, hey, can I buy this in the States? And I don't know if people can or not. So I try focusing on like Suncor, CPG, Whitecap is only on the TSX side, but that's one of my favorites. It's mostly crude stocks that I look at there.
Okay, so these are most of those oil stocks. So now you had mentioned that you
Marijuana
started
too.
you had
So
mentioned that you started doing full-time trading during the recession. So a couple of questions. Number one, is it much harder to trade during a recession like that?
no, absolutely not. I find that there was actually more opportunities during downtrends, and I think that's part of the reason why I really like bottomed out plays, because I got really great at trading the ones that were coming off the bottoms. Another thing I always get asked is like, why do you like all these oversold stocks? And I actually had someone tweet me this morning, saying that PB is a terrible investment. That's a terrible trade. It went from $6 to $2, but in my mind, it's like it went from $6 to $2, so it could probably come back to 350. Do you know what I mean? So
Yeah, and I'm the same way. I mean, I like you had mentioned earlier, you like to keep everything simple, and I'm the exact same way. This is a tough job, so the simpler we can keep it, the better off my odds are going to be. And one of the simplest axioms of the stock market is buy low and sell high. So when
yeah,
there are companies that I recognize and whose business I recognize and I agree with, and I see that their stock price is beaten down, that's like a big indicator for me. That's definitely something that I want to take a look at, and using technical analysis to try and pinpoint an entry and to try and control my emotions is a byproduct of that. So that, to
right.
me, that makes complete sense. You're speaking my language 100% here. So tell me how during this time, tell me how your technical analysis skills were honed or made better.
I started to kind of get more familiar with individual stocks, and just kind of see like where that's when I got really well at candle reading, I think, because I was using the moving averages then. But really, what I'm looking at, this is something I always get asked, is why do I use so many different moving averages? But I'm really not looking at the averages. I'm looking at the candles themselves. So
Mm-hmm.
I started really picking up on all the different candles and how they trade day over day, because I was actually watching the daily candles. Whereas if I was working full time, then I would probably not catch them every single day to kind of keep track. And uh, in itself, I think that actually is what allowed me to become a better at like SPY or SPX trader, because I can start picking up daily moves. And that's something that's really tough to do, is to, people call me brave for analyzing SPY daily or SPX daily, just because of all the different like economic factors that could play into that. But yeah, I got really well at the candles, really.
Awesome. Yeah. And I do the same thing. Like I always like to use a bunch of moving averages. If one of the moving averages is breached, I look to the next one and I start going, down the line. So I use a whole bunch of them as well. Now, are you trading full time now, or do you also have a job right now that you're juggling with trading?
Yeah, so I actually am working full time right now, and I go back Monday. So it's going to be a big change for me, transitioning back into a physical office.
So you've been working remotely then for your job
Uh,
for COVID?
for yeah, probably like the past 5 months or so,
Wow.
and which is why I've been able to pick up a lot more, because I've been saving around 2 hours a day just from the drive back and forth.
Sure,
So
sure.
um, but I actually work on a trade floor, so that transitioned me into energy trading, and that's what I'm doing now. I'm not currently trading physical power just yet, but I'm scheduling physical power. I'm trading transmission. It's a little bit different than the equity market, but I do work on a very, very busy trade floor, so I have that exposure at work too, and I have like BNN, CNBC. It's up everywhere, all over the floor. So I'm always kind of engaged in the overall market anyhow.
That's awesome. Power trading. I don't think I know anything about that. That's so cool that you get to do that all the time. So you said it was a little bit different than equities. I would say, how is it different than equities? Or in addition to that, how is trading on a trading floor different from, just being at a computer at home? Aside the obvious of being around a whole bunch of people.
I think you're probably less opinionated in terms of the trades itself, because with power trading specifically, it's very quantitative, so a lot less technical analysis in terms of trading there. So you're going to have to apply like a lot of the existing protocols that they have in place, versus having like your own bias opinion. And I'm sure some of the traders on the floor can have their own bias and make a trade based on what they predict or foresee. But for the most part, it is pretty regulated.
Okay, awesome. Now, what kind of trader would you consider yourself? Are you more of a day trader? Are you a swing trader? Does your strategy for trading differ from what you do on the floor to what you do with the equity market, especially here in America?
Oh yeah. So like on the trade floor, I'm not trading any physical power right now. So in terms of my own personal trading, I would say for sure a swing trader. But I can day trade too. It's not like my key strength. Like people like Sandman, like
Hmm.
he's awesome at day trading.
Yep.
And since I've been in Benzinga Pro, I've tried really hard to contribute there and give everyone kind of like a trade that they can take on, like versus someone that swing trades like me. I've tried my best to do like a list of day trades, a list of swing trades, a list of intraday scalps, option plays. I've kind of just wanted, I have like a really diverse audience, I guess, on Twitter too. So lots of different investors, like in terms of what people trade on there. So I try to familiarize myself with every single strategy in trading, which can be overwhelming. So I try to stick to, for my own personal trades, I will try to stick to more swing trading.
Hmm. Hmm.
But I will give everyone like a different trade idea based on what their preferences.
Awesome. And I am total agreement with you. I'm very, very similar. I'm predominantly a swing trader, will occasionally day trade when the opportunity presents itself, but I always try to keep myself in my comfort zone. And
Right.
so I totally understand. And I think learning, always being open to learning new things is really, really important in trading. I've noticed that the market will often change its conditions, sometimes in a humongous hurry. So if you're not prepared for that, if you don't have the desiredness to kind of learn or change with the market, it might be painful for you. So I think that's a really, really good point. And that it's no surprise why you're successful. And by the way, you've contributed wonderfully to the Benzinga Pro. We're all very, very happy with how you've contributed. So thank you very much. And I really enjoy your Twitter. I will say you take probably some of the best notes I've ever seen another trader take. Number one, they're very complete and smart. They're neat. They're easy to read. And you actually write it on paper. It's awesome. Tell me about that real quick, if you don't mind. Do you recommend that traders take some kind of notes or journal or something like that? And how has it personally helped you?
Yeah, 100%. And I feel like whether you're trading full time or you're trading and working full time, notes will kind of help you memorize and strategize in terms of what you need to do. So it really does help you prepare. For me personally, uh, the main reason why I would take notes is to plan my trades because I am working full time. So even with option trades, I know that you can build certain models or have spreadsheets and kind of input the data in there so that you can so let's say for instance I wanted to buy Google options
Mm-hmm.
and it was trading, let's say, at like $1,000, and I wanted to get an entry price closer to, let's say, like the 950 mark or something like that for my intraday entry or something
Mm-hmm.
in that week, and I'm working full time. I started to uh, so I would list the stock that I'm looking at. I would list the strike price that I'm looking at, the price it needs to be trading at in order for me to get filled, and based on the Greeks, what would it be trading at that present price? And then so those are all things that I think people should do either way, just to kind of de-risk their trades, because you're prepared. But it also does help you get really great entries, and I think that's the reason why I focus so hard on technical analysis. So they kind of go hand in hand. If you're working full time and TA, you can get some of the best entries and kind of have that preset. So, and if you have it all planned out in your notes, and then you don't really have to be monitoring the chart the entire day because you already have it pre-planned on paper. All that you need to do now is execute, which can be done even if you're working full time.
Awesome, awesome. Okay, so real quick before we move on to some actual TA, we have a question here about moving averages that I want to discuss, as well as like your mindset and your checklist for entering a trade. But before we do that, can you recall either or both of your best and your worst trade over your career?
Yeah, so actually it's kind of funny because this was one of my best trades this week too. My best trade ever was Home Depot a few years ago, and again this week it was one of my best trades this week too. So it's just kind of funny because once you get really familiar with trading that same stock over and over again, you get really familiar with the patterns it has, and you can look for a future opportunity, which is exactly what I did this week with Home Depot. One of my worst trades ever was I think it was CXR. It was a Canadian stock, but it did trade on both exchanges. And that's when I was fairly new to trading. I did really, really well when I first bought that one. But I think at that point, that's when I got a little too attached to the stock itself. And even though it was breaking my technical indicators, I felt kind of biased and very opinionated about the company. So I had taken a fairly substantial loss on that, like over 6 years ago. But that's part of the reason why too now I kind of just like leave some of my own biased opinions. No matter how I feel about the company, it's what's in front of me. Like what's the chart doing? What is it telling me? Do you know what I mean? Versus what I actually think it's going to do. And that was like a really big learning lesson for me, especially being, like pretty new out of college, obviously not having like a whole lot of money and then taking a big loss like that. And I also got really familiar with reading, like SEC filings for some of like the more riskier plays that I take on, which are the micro cap low floats. And I started to really familiarize myself there because I've been caught up in offerings. I've experienced all of those, noob errors that I'm sure a lot of people on Twitter have. So I had to figure out a way to prevent that from happening in the future. Besides the chart, like beyond the chart, what else do I need to know to kind of limit my risk and my losses?
Absolutely. And I always say to people, you're always going to learn your biggest lessons from your losses. You're probably going to get the most like learning experience from losses as opposed to winners. So to me, that's, as long as you look at a loss as as long as you break down why it didn't work and then you learn from it, it's valuable. If you don't take anything away from your losses, you might be doomed to make the same mistakes in the past. So now you had mentioned Home Depot, you were trading it this week. So were you trading a breakout of this high here? I went ahead and pulled up a chart here. Is this effectively what you were doing?
Is it? Could I share my screen?
Yeah, let me go ahead and stop mine and then you'll be able to share yours. Okay. So there you go. You should be able to just hit the share screen button at the bottom.
Okay.
And if you've got multiple, it's going to ask you which one you want to share.
Yeah, I'll just share my bigger monitor here so it's easier. Now that kind of disappeared there.
I see the HD chart right here on your overlaid on your background.
So if we take like a quick peek at this one, what I was really looking for here, and this is completely different style than what I normally trade. So this is, I've got a few different strategies. I've got like my oversold strategies, and then I also have my break all-time high strategy. So those are some of the two things. It's actually funny because they're the complete opposite, but I've kind of tried to strategize in both ends. Like how can I trade the top and how can I trade the bottom? So with HD, what I was primarily looking for here is a break of highs. And back when I had my very big trade, like back in here, this is when this was my really successful trade. And I don't know if you can see that there. And this is one of my favorite indicators. This here is a tweezer bottom. So when you get like those, the really solid red candle, and then that's followed by the green candle, and then some continuation, that's what I like to see. So this was when I had my biggest trade ever. So I had swung options into the hurricane season, and I bought leaps a few months out, and they went from like 20 cents to $25. So,
now, as far as like the prepare process for this, so you had mentioned earlier that you like to prepare it and kind of review the charts. What was it that kind of stood out of here? I am assuming that the tweezer bottom, you're talking about the red bar followed by the green bar right after that. When you're actually preparing to enter, do you enter after that green bar, or are you trying to actually catch that green bar on the way up? What is the step here to try and kind of plan for this ahead of time?
So I guess we can talk about both scenarios. So first we can start with this one back here. With that tweezer bottom, I normally like to get an early entry, but I don't like to go like all in at once. Like I'll try getting like my low entry of what I think could become a low entry. And the way the few things that I look at is, did it open higher on the week? So I'm an open close trader. So if it opened higher, that's my first indicator. So had it opened higher that week, which it looks like it did, I would have tried to assume that it's going to try to try to retest that 5-day and gain the top of the candle. So
is there any way you could make the chart a little bit bigger so it might be easier for the audience to see here? There you go. Perfect. Perfect. Okay.
I could probably even zoom in a little bit there too. Oops. Yeah, so just looking at these candles right here. Okay. So an open higher to me would indicate that it's likely going to try to retest that 5-day there, which it did do, but you can see it didn't catch the 5-day. Like you notice how it closed just below that.
Right.
So I would have entered in on the lower end looking for that 5-day retest, but not a full position. Like I usually try to scale in, especially if it's an option play, just to kind of keep like my average a little bit lower, but not wanting to catch like a falling knife or something like that.
Sure.
So my second indicator would have been, okay, well, it failed. It did open higher. It did test the 5-day, but it had failed to close above the 5-day. I need a 5-day close. So from there, I would then look at, okay, the following week, because I'm an open close trader, did it open higher? And it did. It opened above, and it opened above the 5-day. So that's a very bullish indicator for me. At that point, that's when I would start adding heavy. Once I have like a 5-day weekly trading above the weekly after weeks and weeks of failing and trying to consolidate there and not really catching anything, that's when I would be a little bit more comfortable sizing up on my trade.
Okay, and just to be, so what moving averages do you have here? I think you said you had a 5-day.
Yeah, so I usually look at the 5-day on a weekly. I'm always looking at the 5-day on a weekly.
Gotcha.
This chart, I just put the 5, 10, 20 because when I'm playing, when I'm trying to catch the bottoms, I'm always looking at the shorter time frames because I'm trying to get the best entries possible. So I will use like the 5-day, the 10-day. Sometimes I'll even actually use the 15-day versus the 20-day, depending on how big of a range of a drop it was, because the 15 and 20-day could have a really big spread in terms of price because it could have been a really big drop.
Okay, now are these the simple moving averages or the exponential moving averages?
Yeah, so I'm using simple moving averages.
Right, me too.
And people always ask me why I use simple over, like the EMAs, but really it's just my own preference. I don't think one is better than the other, nor do I think one is more accurate than the other. Like I know a lot of people use the 8 or 9 EMA, which really in terms of price, they're very similar to the 5-day. But it's just kind of a habit that I've built over time, and I kind of have never transitioned away from that. But for me personally, I'm looking at the candles. So whether I'm using a 5 SMA or a 9 EMA, I could still try to estimate where I think that support is. So regardless of which one I'm using. And I mean, we could look at examples of that later if you guys wanted to.
Okay, awesome. Now let me ask you, I know that you're talking about the weekly chart here, which is awesome. Do you ever use a daily chart? And if you do you use the same moving averages on the daily chart, or do you adjust them a little bit?
So I do use daily charts. And sometimes even when I'm trading intraday, if I'm doing like an intraday breakout, then that's when I'll use like the 1-minute or 2-minute charts to kind of time like my exit. But I use all averages, and that's because I'm trading the candles. So I could pull up like a few different charts just to kind of give you like an idea. And it's one of the most common things I always get asked, but on the weekly, you're going to be using the shorter ones so think of it this way. If you're trading a downtrend, so like this coming down, you're going to be looking at 5, 10, 20, because the 30, 40, 50, 100 are going to be like way back up here. Like it just makes sense when you think of it that way. Whereas if you're trading like the uptrend, then that's when I start to so if I start to increase my moving averages as it comes off the bottom. So, and then ironically, it always aligns with the candles. So that's why I always go back and say the moving average itself to me doesn't really matter. the candles do. But I will make a note though that the ones that I really do take like a deep look at when they cross over are the 50, the 100, and the 200. But that's because a lot of algorithms are designed with those moving averages. So those can just automatically become key indicators. Not that I think that they are more significant in terms of the chart. I just think they're more significant in terms of you know, like different algorithms that are built and designed for the market for trading. They can be triggered a lot easier than like a 5 or a 10 or 20 day.
Now, do you use the same type of indicators, or do you even use the indicators itself to exit the stock? Because I'm looking at right here, and forgive me, I'll draw a little bit on this chart. I noticed that this uptrend here takes place, and then it kind of pulls back to both what looks, this is the 5, and then also the 10. Do you, and then also it looks like it touches the 20 on the nose right there. Do you use any of those indicators to actually close your trade, or do you do it by feeling, or how does that work? How does your exit strategy work in conjunction with your technical analysis?
Yeah, so if I was looking at this here, I would notice that this is where it had initially dropped when it failed that 20 days. So notice how it tested the 20 day there and held. Yep. And then notice here how it tested it and it failed. The 20 day becomes my first breakout indicator. So it tried to test it back here and it didn't quite get there. But when it had opened and moved above that 10 day, this was a bullish indicator to me right here.
Right.
And so once that had held, then I'm looking for some continuation. You can see how well it holds over that 5 day. But the 20 day crossover here is really bullish. So I don't have it up on my chart, but the next thing I would look at without even looking. So this is a good example of, I don't really need to have the moving averages on here. I could just visually see it. So this is probably where the 30 day is. And it's where that top wick is. And notice how it kind of just landed right there. And then it had started to sell off because there's some really strong resistance here. You guys see that?
Yep, that's perfect. That looks like it's to the penny.
Exactly. So that's why I say the moving averages to me, yes, they do help assist. But for me personally, I think it helps me explain better to other people because they can't see what I'm seeing. Like I can't explain every single candle on each chart in like a short, brief Twitter post. So that's why I try to implement the moving averages, and I'll try to draw a bunch of lines as much as I can just to kind of show people. So this here would have likely been the 30 day.
And so are you exiting on that? Are you watching it to see if it actually cleared? Let me ask you a hypothetical situation. If that is the 30 day and then it clears the 30 day, is that also bullish? Is your risk on trade still in effect at that point? Or are you taking partial profits?
Yeah, so I always take profits at resistance.
Okay.
Usually like I'll start to like kind of scale out. So for instance, PB, it had resistance at 275. I took a little bit off around like the 278 or the 268 mark because I didn't want to, get caught and not take any of my profits and have it open lower next week and then back test lower again. So yeah, I always do try to take a little bit of profits at resistance. But one thing I do know is volume. So if there's volume coming in, then I'll likely take off a little bit less than I normally would because it means that the buyers are still there. The sellers have
awesome.
So if I were to look at this next, so you can see that it failed, back tested the 5 day, failed again, back tested the 10 day, and look at where it held. It held that 20 day.
Looks like that wick stopped right on the 20 day, right on the head. Right
on that. So, and then you can see when it started to break out again and it gained the 5 day, where did it get stuck? So you can see here how it got kind of stuck right there.
Yep. Same spot.
So this is a perfect example of an open higher breakout. So look at this gap. You see how there's a tiny, tiny gap right here?
Yep.
That means that the gap is above the wick. So above these previous wicks that it had here. Those two tiny wicks right there and the one right there.
Yep.
It opened above those wicks. So to me, that's a very bullish indicator. It means that it's likely going to try to test higher. And the next resistance point that I would look at, just from like looking at this chart, I would probably look at the bottom end of this candle here, which aligns well with that candle there.
Which aligns pretty much with
that wick. Yeah. And then the second point, and that's kind of why I have like really precise prices, is because I'm not just looking at the highest candle, I'm looking at previous candles too and seeing where their wicks are. Which again is why it's a little bit tricky for me to sometimes try to explain these things to,
Mm-hmm.
to people. And then the next point there is that's when I would start to look at, this point here, where that top wick is and where the top of this is, which aligns really well, almost to the penny of where this top is too. Like they're pretty close. And again, that's where it got stuck.
So we just got a great question here. Why is the wick significant?
The wick is very significant in terms of where the price could go. So if it's, people kind of look at the wicks and they don't see how significant they are because they assume that the candle itself, like the solid candle, is all it needs to break, but that's not necessarily true, because that was still previous price, right? So it was still a high or a low, which is why it matters. So this being like right here, these wicks, these are significant because this is the low. It held there, but the wick was still, even though the candle was right here, that's not support. That's stronger support, but really this could actually go down to here. And it's the same with the wicks for the top.
And I mean, and if you think about that from a trading perspective, so sure, the candle there looks like it closed a little bit above 150 based on the drawings that you just made. The wick went all the way down to 139.80. When I actually look at that, when I look back, when I look to the left, if you will, that tells me that there were still people selling, even though it broke beneath 150. There were people selling all the way down to 139.80. So that is a important thing to know. There in that area, there's still sellers in there. So yeah, it did breach some support, but there's still some support beneath that. So
yeah, and I don't have like the full chart up, but I mean, I'm sure if you look back probably 5 years ago, there probably was some sort of support in that range, which is probably why it got stuck there. And you can actually even see that this aligns really well with here.
Yep.
So that's kind of where it ended up, hitting when it initially had tested lower that time. So if we want to look at it this week, the reason why the wick was very important to me this week and last week. So with Home Depot, I was playing the breakout. So notice how it held that 20 or the 10-day really tight there. Yep. I was looking for an open higher last week, which it did do. And the main thing I was looking for is, besides the open higher, I was looking for a breakout above the all-time high. So there's a difference between a break over the all-time high and a close over the all-time high. So the all-time high is 259.29, which you can see it opened just above that this week.
And so that's then you're still risk on at this point. Right?
Yeah. So for me with this one this week, it was a little bit tricky. So last week was a bit easier for me to trade this because it had open higher and it broke above that wick, and then it had closed. So it closed above the candle and above the wick the previous week. So you can see it closed at 260.38. So for me, that was very bullish. So what I was looking for this week was an open higher and some more continuation, but it actually had opened lower, which to me wasn't necessarily bearish because it already had broke and closed above the all-time high last week. I don't disregard that. Like I still factor that in because it has shown momentum and it's shown strength. But I didn't really think that this would be like the big breakout week, if that makes sense, because it had opened lower. I was really wanting it to open higher and kind of have like another one of these where it just kind of gaps up and keeps going. So now what I'll look for again going into Monday is I really want to see this open higher this time. And the implied move that I look for is the size of the candles when it previously broke highs. So people were asking me like, how do you know where it's going to go? I don't know where it's going to go. My guess was my highest range was 270, which was pretty close. It got to 267.80. That doesn't mean that I'm not going to sell unless it hits 270 to the penny. That's kind of ridiculous. Like you have to kind of look at the other factors in. So it opened lower. It might not get to 270. The volume wasn't as high as I would have liked it to be. So that was another indicator too. Like there wasn't as many buyers. And the way that I try to predict the previous moves are based on the previous candles. So this candle here, for instance, like you can see, where did that go from like 185 to just
Almost
under
200. Yeah.
200. Yeah. And then again here when it had broke higher, and it went from, like same thing, like you can kind of try guessing that Home Depot with strength, with volume, with an open higher can potentially have a $10 to $15 move on a week.
Awesome. Awesome. So another quick follow-up question on there. One of our viewers here was asking, how often do you check and analyze the charts? Since you're using a weekly, are you looking at the daily after the close? How does that work? How often do you actually refer to the chart? And is it always to the weekly chart?
No, so I use weekly and the daily. I kind of just use the weekly. So for Home Depot, I would be looking at the weekly because it's breaking all-time highs on a weekly basis. So you need that bigger time frame to look at. But for another play that's more bottomed out, I would be focused a little bit more, on the daily chart, like PBPB, for instance. I would be looking at the daily on that one. But I'm looking at both daily and weekly on both because I'm primarily a swing trader. So I kind of will monitor the daily trend just to see where it's at in terms of that. But then I'll go back and refer to the weekly just to see where it is in terms of like a weekly price and where my trade is at. So for instance, if we look at, I'm not sure if I have it saved or not, but I mean, I guess we could use this one as an example too. This was like a recent trade of mine. So PFE, I was still looking at the daily more so than the weekly because this one hasn't broken all-time highs. This one is still trading within range. So, but if you pull it up on a weekly chart, then you just get like a better view in terms of a swing. So if I have leaps in PFE, of course I want to see what the weekly time frame would look like because I'm not just day trading it unless I'm like in like a weekly or a monthly option on this thing. So just even like quickly looking at it here too, you can see that it's more clear on a weekly because the candles are more solid.
Mm-hmm.
Which I always recommend if you're new to trading and you're a swing trader and you're just getting into technical analysis, try to actually avoid like looking at like the 1 minute, 5 minute, the daily charts as much as you can. Like try to focus more on the weeklies, especially if you're swing trading, because then you're only focusing on one candle a week versus 5. So it makes it a little bit easier for you to know where your trade is at. Because that's something in my Discord that I've been telling some of the new guys in there are rather than asking me every single day, hey, Izzy, like, where is this going to close? Or, hey, what happens if it does this? I'm like, okay, well, go back to the weekly chart. Has it broken weekly support? No, it hasn't. So you're still good. Like, don't worry too much about, the daily, ups and downs if the trend itself hasn't been broken on a bigger time frame, especially because at that point, when you're in a trade, you should know what your time frame is. You should know if you're holding this for a week, 2 weeks, 3 weeks, a month, a day. You should know that before getting into the trade. Like you have to have a plan and basically use the chart based on your plan. Okay, if you're only day trading this, then use a 5-minute chart. If you're swing trading this, pull up a weekly chart.
And I think that's real smart because the chart is not going to have all of the answers for you, right? So if you're using this to supplement your plan, you have more data points to go off of, you're inherently going to be more successful. Now, I did notice that on your daily chart here, you have 100 and a 200-day moving average. Is there any reason for having the difference here on the daily? What is it signifying?
Yeah, because this is it's already past its 5, 10, 20. You can see that the sell-off wasn't as significant as the previous sell-off. So exactly to what I was saying earlier, I'll have them like a little bit like further out based on how big the drop was. So if the drop was bigger, like it was here, at this time I wouldn't have been looking at 100 or 200 day. I would have probably been looking at the 5, 10, 20 until it regains the 5, regains the 10, probably like there, regains the 20, probably there. Do you know what I mean?
Yeah, absolutely.
Whereas this sell-off was a lot less. So like this implied like a smaller sell-off here. And it actually held like pretty well with some of these candles that we have here. But I would be looking at the higher moving averages because the the sell-off isn't as big. I don't really know how to explain that in words, but the time frame is a little bit less to get to those averages, because there's not as much of a gap to fill in terms of how much it sold off. So when you're putting or applying like a 5, 10, 20 with such a small frame like in here, it becomes really tight. So you're not really getting much value there. And you could easily look at this too and not use any indicators, and you could see like there's definitely some resistance there. You can see like where the bottom of that candle hit, and you can curve your lines. They don't have to be completely straight, because the previous candles will align well too. That's kind of easier. I don't post this on my Twitter because then I confuse the crap out of people on there. But yeah, you can just see where the previous wicks were, and sometimes I'll do that just to kind of like see which range it's in, and you can see it got stuck there. So I automatically know that just looking at the wicks here, this is where I need it to go. And you can see that's a little bit closer in terms of price right there than like, the average trader would have been looking right above there.
Yep.
And they would have missed that sell-off. So I had posted this on Twitter back here, and I had said, I'm looking for the pullback and consolidation. So what I meant by that is I was looking to see if it was going to actually break this wick here. And this is why wicks are important, because you can actually get better entries this way. So I was looking to see if it would break that wick, and it did not. So it didn't break that wick. And even just by looking at this chart, I would just know that the 75-day would have probably been where this wick is. And that's why I use the 50, 75, 100, 125, 150, 175, 200. They align well with the candles, and it makes it easier for me to explain these things to people. But with or without them on my chart, you can just, if you're new to trading and new to technicals, you can just apply them on there to give yourself a better idea of, if you can't visually see the support and resistance, you can apply those different moving averages on there. And I can almost guarantee you that they'll align with those candles that I'm seeing, if that makes sense.
Sure does. So we got a couple of quick questions here I want to ask before we move to the next section. New trader here, what do the black candles mean?
So with the black candles, it usually means that they still were green on the day. So like if they had opened higher and they tested higher, but then they ended up closing near their lows or where their open was. So they're not necessarily bullish. Like you definitely want to see like the solid, white candles or green candles on your charts. And when I was starting to see some of these black candles here, that's when I was a little bit skeptical. And you can see that it had tested actually its 100-day there. I don't know if you can see that on the chart. And it looked like it was going to break out, but then it failed. So another thing to watch for, aside from like what the candles are displaying in terms of price action, because that's what they are, is price action. It's just showing you what the price action was on the day. And you can actually start getting more familiar with some of these different candles. Like you can start picking up on what, like a doji is, or an inverted hammer, or, like a dragonfly doji, or, like a bearish engulfing candle, or just start picking up on all the different candles, and then you'll get really familiar with the actual price action on the day.
That's a really good tip. And when I was first doing that, I would, I'd read about all of these crazy things like dojis and engulfing candles and all of that. But the more charts that I looked at, the more I was able to notice them. And eventually they kind of just stood out like I was reading. Like it just wasn't really a big deal. So you definitely want to try and use or to try and review charts as much as you can. Practice makes perfect. It's the same in sports as it is in trading, at least in my experience. So yeah. So that's really awesome. That is super in depth. It seems like this is second nature to you. It seems like you do this very, very easily. The next thing that I wanted to ask you about is, how do you actually use Pro in your trading here? Obviously, we're looking at a stock charts chart here. So what types of indicators or tools do you use in Pro on a regular basis?
So in Pro, I actually I had like this mindset before that, like, why would I pay for, any, additional tools if I'm working full time? I won't even get that advantage of using them. So, being in quarantine, I decided, okay, well, I'll check out some of the different, tools and services that there are out there now that I have a bit more time on my hands. Mm-hmm. So using Pro, I found that I actually I don't need to be, trading full time to use it, because the things that I actually personally was using were things that I was downloading actually after the market closed. So I was looking at things like the block buys, the option sweeps. Those are for my option trading. And I was actually doing that. Like, whether or not they came into my feed, it's great when I have it up on my screen, and especially being, home right now. If I have it up on my screen, then it's super helpful. But in terms of having like the news feed kick in, and I don't really have to be too, if I'm working or doing whatever I'm doing, I'm aware, and I have like the squawk going on, and Benzinga Charlie is awesome for keeping me really up to date with news. And since I'm going back Monday, I'm actually like kind of pondering here, is like, how am I going to get to listen to Charlie? I mean, I'm sure if I open it like on a browser on my phone or something, I probably still could. But yeah, that you can still look back at historical news and data, even if you're not catching it in real time. I can go in and I can download the spreadsheets in here. Like, this is for me personally. Like, I'm using mostly those features in there, and I'm using obviously the watch list. I really love the watch list, and I love that you can kind of just like put them up on your screen and have different ones going on there. I am using stock charts, but I've actually started using the trading view like within Benzinga a lot more now for my day trades, using like those 1 minute, 5 minute charts in there if I'm looking at scalping something. So for instance, yesterday with PBPB, I was actually pulling it up on TradingView. So I've become a little bit more familiar using TradingView now. I kind of feel like a noob on TradingView, but I really like that it's like integrated into the system too. Yeah, it's like besides those features, the chat room is really great too. I've obviously like developed like some big engagement in there, and a lot of networking, and some great people in there. And I find that I'm not being biased or anything against Discords or anything like that. Like, those are all great, but the professionalism in the Benzinga chat is awesome. So if you're looking for really level-headed traders that are in there to trade, like they want to be in and out, they just want to talk trades, no politics, no biased opinions. They're just looking to make money. I haven't seen anything better than that, than the Benzinga chat room. Like, that they're just in there to make money, and it's great to see. And everyone's sharing ideas and opinions, and no one is like disrespectful in the room either. Like, they're open to all different styles of trading, including myself. So when I first joined Benzinga, I was kind of talking to myself in there. So I was told, like, I was encouraged to post as much as I can, and try to get some engagement in there. So my first week in there, I was literally talking to myself, and I had some killer calls in there. I was like, man, no one's even listening to me. So whatever, okay, I'll just keep talking to myself. But actually, a few people they were just kind of watching in the back, and they had reached out to me and said, hey, I've been monitoring this Miss Izzy girl, and she's pretty good. Like, I really liked her call this week. And a lot of them are not on Twitter either. So I guess it's kind of like a different audience on there, I found, like, where.
Yeah, definitely.
Yeah.
And so I want to give a couple of pro tips, and I want to give you a thank you. Thank you very much for saying that about the chat room. We work very hard to try and make that a communal place where people can come in and help make money. And you absolutely participated in that. I was one of those people. I started seeing some of your posts. I was like, oh my gosh, she's really making some great calls here. This is awesome. And I obviously started following you on Twitter, and I see all of that stuff. So that's real great. Now, a couple of things that I wanted to say. I know we had a question earlier about how do I get to this screen? That's a great question. So right here, real quick, this is the details tool, and you'll notice that I'm on the chart tab. So when you actually load up the details tool, the first thing that you're going to get is this tab. This is the overview tab. This is going to give you a basic chart, but you can't do all of the real cool stuff, all of the technical analysis stuff that Izzy just talked about. So what you want to do is you actually want to click on the chart tab. This is going to give you the trading view chart where you can add indicators. It's going to show you all the overlaid volume and all of the different candles. Now, really quick, I want to go back here. You had mentioned the block trades and the option activity, and I'm so happy that you did, because these are things that I use all of the time. And I want to be very, very clear about this. It's not as if I'm looking here and I say, okay, there was a block trade on CSTM at 882. This is a buy signal. I don't use it like that. I'm also watching charts. I'm also watching different levels that are made either by moving averages or candles or any type of drawing that I've put on the chart to identify a support and resistance zone. And when I start seeing block trades going off around these support and resistance zones, it helps verify that what I'm looking at is actually correct. And I'm perhaps increasing my probability of actually making a successful trade. Now, I know that when I talked to you about this before, Izzy, you said you like to look for block trades that are at or above the ask. Is that correct?
Yeah, I mean, it doesn't always signify things. Like I obviously, just like you said, I'm looking at the chart, I'm looking at its options, I'm looking at the Greeks, I'm looking at the, like the volume and all those sorts of things. But I find if someone is willing to just kind of like from a logical stance, like if someone is willing to put, millions and millions of dollars at a higher price, then they're obviously trading it because they know what they're going to get in terms of a return. Like they have an idea. So it kind of is almost like a validation in that point. So this is one of the reasons why I really started to love Benzinga Pro, is because I had my plug call in there. So Benzinga actually gave me the plug call. I never had that chart on my radar at all. So that's an example of how I can use it actively and how I could also use Benzinga Pro later on. So I would normally, be scanning the block, and that's when I started actually scanning more of the block buys, is because of that call. Because prior to that, I had been trading Macy's, and we won't talk about that because I sold it too early. But yeah, that one had a block buy, and Macy's block buy was below the ask. So that's part of the reason why I say it's not always significant.
Right.
But it's good to be noted, but I did like it still because of the chart. So with plug, I saw it pop up on my news feed, a block buy.
And that makes, it makes complete sense. And I like what you said about the whole having, just having kind of validation, having another data point to go off of. All right. Yeah. So, and that's exactly why I use them. Now, I did want to really quickly throw in a pro tip there. You had mentioned about the squawk. You absolutely can run the squawk in your browser. And if you can get like a little ear pod in your ear and you can still run it in your browser, you can have it in your pocket or in your purse and still be able to listen to the squawk. But yeah, awesome. I just want to let everyone know right here, we will be coming out with a mobile app that will allow you to listen to squawk on your phone. So we are addressing some of these problems that people have, or some of these inconveniences or pain points, as we like to call them, and we are going to try to solve them as soon as possible. So I don't have a date for you on that yet, but that is coming. I know you also very briefly talked about the watch list. One of the other things that we're going to be adding to the watch list is a notes field. So while the notes won't look as pretty as your handwritten notes, you'll still be able to put in information and notes about a particular trade or a particular stock or a particular setup. So for example, if you had plug on your watch list and you saw a block trade come through the post, you could write that down and say, hey, on this date there was a block trade. This is kind of what helped further me along in that trade plan. So those types of things are coming. We're always listening to people out there for stuff that they need, and we're trying to address those things. So I think we had a little internet hiccup there, and we lost you when you said that you saw the block trade in your newsfeed for plug. Did you want to finish that thought off there?
Yeah. So when I had spotted that, I was like, my first instinct obviously is always to look at the chart. So I had pulled up the plug chart. I'm familiar with plug in general, like, in terms of energy. I work in energy, so it caught my interest. So I pulled it up and I loved the chart. It was trading around, I think, like 415 or something then. And I really loved the bottom. I loved the way it was looking on a weekly, like the weekly chart. I'm not sure if I probably have it here saved on my computer. It had formed like a really beautiful, like rounded bottom. So I think this is May 27th. That's probably about right. So I think this is around the time when I had pulled it up. This was the daily chart, and I really loved how this was kind of consolidating. This was kind of like shooting upwards. It really made higher lows. So you can see the lows that it had here were continuously higher. I really liked that. And then what really caught my attention was the options. So and we can look at the weekly chart here. So when I had spotted this, it was around this range, and with or without moving averages on here, you can easily see that this is why wicks are important again.
Here, go. I actually was sharing my screen. Go ahead and share your screen again,
Oh, sure.
so you can show that.
So
Perfect.
yeah, that's why I kind of like emphasize on the wicks is I really wanted it to break above those points here. And this is a perfect example of an open higher break. So open higher, it didn't breach back below to the previous candle, and it just broke highs. And I don't know if anyone's actually traded this, but this went all the way to $10. So this was a killer trade. And this is a perfect example. And this is kind of what I want to see happen with Home Depot. Like the implied move that you're looking for is based on that open. So if we do see an open higher on Home Depot this week, I would not be surprised to see it have like that really solid candle. And this one actually did struggle a bit. So it did struggle it didn't actually close, I think, above that wick that week. This is, I don't have like the exact chart up, but it kind of struggled. And then until it finally broke above that wick, that's when it made those really big, new highs.
Well, that ought to tell you something right there. I mean, if it struggles at a resistance zone and then it breaks it, it's really got the oomph behind it. It's really got the capability to run, and that's exactly what happened in Plug here. So,
and that's what I'm looking for with Home Depot. And actually, a previous one was also Netflix. That was another one that was like high on my radar to break all-time highs, and it did. And it did struggle for a bit, and then when it finally did break above and create those new highs, Disney's another example of one from a few months ago. But kind of funny if you look back here again too, like that's another example of like a tweezer bottom right here.
Yep.
So and so when I had looked at the Greeks, I have a very like specific strategy with my Greek trading. This one fit perfectly. So I was like, oh my God, this one is like, this is the best play ever. And that's why like people on Twitter were like, I don't understand what she sees in this thing. It's just, it didn't really look that attractive to most people. But for me, I was like, oh my God, this has an amazing chart. This has like insanely mispriced options. Like the misprice in the premium was killer. Like it was unreal. Like they were trading probably like more than half or more than like the deltas were, I think, more than double what they were trading at. So it gave a lot of room, and the implied volatility was pretty low, which I know sometimes people don't really consider those as like more rewarding plays, but when the chart aligns well and it gives so much more room, then I find that the volatility can come in. It's like I guess the way I look at this, and people in the Benzinga chat have noted like they don't really like low volatility or implied volatility plays, but if it's something like Plug, I was kind of looking at it as this has the volatility without the price. So I was getting it for a discount.
Yeah.
And that's kind of how that one played out. I'll actually take off. I'll stop sharing my screen here.
That's a really awesome point. So, okay. So we've actually already run 7 minutes over our time. That's what happens when you're having a good time. It just flies, and now that we've talked more about options and the Greeks, I think maybe in the future at your convenience, maybe we should set up another session where we kind of explain Greeks, or we kind of go through that. Would you be interested in something like that?
Yeah, that would be awesome. And actually, I got an email to do, I'm going to be on next Friday's boot camp, or this Friday's boot camp, but I've been so busy. I'm like, this guy's probably like, she hasn't responded to my email. So I'm responding to that email as soon as we're off this call.
Awesome.
It's going to be I chose to do basic options. So like just single legged options, because a lot of my audience, like I do have some experienced option traders on Twitter, but there are a few that are brand new to options. So I kind of wanted to just, start from scratch, and I felt that was the most appropriate. But I would definitely love to do something with Greeks at some point too.
Awesome. So we will absolutely work on that. You and I can stay in contact on that. I do want to go through just a real quick couple of questions here before we wrap it up for today. We had one of the questions here that I just can't answer, so I'm hoping you can help me out with it. Looks like Miss Izzy is in Canada. Yay. I am as well, and was wondering, what broker do you recommend and why? And the reason I want to turn this over to you is because I get these questions all the time about some of our Canadian customers, and I'll be honest, I have no experience with Canadian brokers, so help me out here.
Okay, yeah. So I get questions all the time about U.S. brokers, and I'm like, I have no idea. I'm like, why are you guys complaining? They're all free. Like, you guys use all of them. Like, no. But no. So for Canada, so I actually have 3 right now. I'm using Interactive Brokers. I've recently opened it up. I find that their platform is definitely like it's more intuitive. there's a lot more in there, but it can be maybe hard to navigate for new traders. So I think it's more for like advanced pro traders, but they do have the best rates in terms of options, really good pricing and options. I opened up a Quest Trade account just like as a backup, because there were certain securities I couldn't buy in my TD account for some of the low floats. So I had to open up a Quest Trade. TD is my primary broker, and they are, you know, like there's benefits, and it just depends on what kind of trader you are. So with TD, I have obviously high volume of trades. So, you know, I'm paying around like that $7 mark for my trades, but their average fee is $10 for commons. I think it's $1.50 for options, which is pretty expensive, especially if you're comparing it to, you know, what people pay in the States. So if you're looking at options trading and you're actually trading full time, and you're focused more on those sorts of plays, I would recommend Interactive Brokers, because they also have the 4 a.m. window for pre-market.
Yep.
Whereas TD is 6 a.m. and, you know, that can, like, well, I guess I'm saying 6 a.m. my time, so 8 a.m.
Well, so now let me ask you. So your TD, obviously, you're in Canada. Do you use? Is it Thinkorswim, the platform that you're using?
So we do have Thinkorswim. I'm not personally using Thinkorswim. I'm just using my direct investing, which is completely different. It's not. So that's why when people always ask me about TD Ameritrade, I honestly have no idea, because it's a different platform. But I'm sure someone else could answer this better than I can. I think that if you're using, like, we have different registered accounts here in Canada. So we've got like our tax-free savings where you're not taxed on any of the capital gains there. And from what I remember reading, and this is partially why I don't use Thinkorswim, is you can't use it doesn't link to your registered account on Thinkorswim. And that's what I remember reading. I don't know if that's right or wrong, but I want to be trading from those accounts. So I just took on the TD Direct Investment versus the Thinkorswim.
Gotcha.
But TD, I find, is definitely, you can definitely get really good fills. It's super reliable. Quest Trade has a half-hour earlier window than TD does, though, in Canada. So that one there starts at 5:30 my time. So I think that's 7:30 Eastern time. So 7:30 Eastern time for Quest Trade for pre-market versus 8 a.m. for TD.
Yeah, and that is, I'm in America. I use Thinkorswim. My broker's TD Ameritrade. The earliest I can trade in the morning is, in fact, 8 a.m. Eastern time. So I in order to, as far as I know, in order to trade any earlier than that, I would need to get something like Interactive Brokers, which you also mentioned. So
yeah, okay. So it has the best timing, best for options. TD, I think, is the system is really, they have the best platform, in my opinion, like in terms of like how easy it is to navigate and to use it. And I've seen Thinkorswim, like I haven't used it personally, but it's definitely like an all-in-one place, I think, for someone that's new to trading and actually wants to look at technicals. But yeah, it's just the rate. So that's something else that you have to factor in. We don't have free fees in Canada, so you're going to have to really limit to what kind of trader you are and what you're willing to cut out and take back. So that's why I have 3 right now. It's kind of annoying, but yeah. I'm just trying to like capture, like I'm trying to save money and capture everything in as many ways as possible.
Awesome. Well, Miss Izzy, thank you so much for joining us today. I definitely want to have you back. Good luck on the boot camp. The boot camps have been going over incredibly well. Anyone who's not familiar, check out the boot camps. They're a great way to start. They're normally free to join, and you can actually choose if you want to pay for some of the more premium things. So go ahead and check that out. Izzy, thanks so much for joining us. We're definitely going to be in contact. Keep up the great work on Twitter and in the chat room. You're doing phenomenal. I really appreciate all the support. And to everyone that joined us here on a Saturday, thank you so much for joining us. A quick reminder, there will be a replay of this recording that will be emailed to you if you registered. It will also be available on the Benzinga Pro help site. And Izzy, I will give you a public link that you can share with anyone that reaches out to you. So that'll all be available a little bit later today. Again, I just want to thank everyone for joining us. Until next time, Zingers, happy trading.
Thank you so much, Ryan.
You're welcome.
Bye.